Great. Welcome to Digital Asset News. My name is Rob, and today, as the thumbnail and title suggests, there could be a reversal for Bitcoin. We're going to take a look at a specific couple of indicators, the one-year HODL and the RHODL waves, to see what's going on. But remember, just because we have one specific segment, we have to look at some other things. So we're going to take a look at a little bit what's going on with the macro, what's going on with the IRS, and what's going to happen in the next month or so. Also, speaking of IRS, the October 17th deadline for the tax extension is running out for U.S. taxpayers. I'm going to show you how to talk to some experts in an AMA. And then lastly, I just want to go over this stunt with the SEC. As I say, the SEC is out of control, and this Kardashian thing, which doesn't make any sense to me, and really how much corruption there is in Congress. So we'll do all that, and of course, we'll go over a little Q&A at the very end. So first things first, welcome. Thanks for stopping by on this beautiful Tuesday. Yesterday, couldn't get a video out, had a lot of things going on, but today we are back, and we're going to talk about some positive news for once. It's a little indicator. So what we have today, there's these great charts I like to use from Look Into Bitcoin, and there's a link in the description. It's just lookintobitcoin.com. And I like them because they're free, and they're high quality, and they're great. And one thing that I got a notification on was the one-year HODL wave is at an all-time high. I was like, oh, I have to take a look at that. First of all, what the heck is that? So the HODL wave data groups Bitcoin by age since it was last moved from one wallet to another. They're looking at the percentage of all Bitcoins that have not been moved from one wallet to another for at least 1 year. And if I can see that, the higher the percentage of what's being moved and what's not being moved could indicate there may be a reversal. And I found it very interesting that right now, we're at an all-time high of 60, is that right? 66.08%. So 1 year, people are holding this 66%. People just holding. They're holding Bitcoin, they're not moving it, which is pretty amazing if you think about just how far we've dropped over the last year. So that's at an all-time high. But when I took a look at it, at the one-year HODLs, we can go back all the way to 2012. I mean, Bitcoin was around 2009, and we started to look at this data around 2010, obviously, for 1 year. You can see that it went up for a while, but it was very volatile. And the last time it hit even 60%, the last time was around, that's not right, December 15th, 2015. Then, of course, in January, it went up a little bit, 61%. And in February 2016, and you can see what happens here, things were just moving sideways for a while, and then it just started to go up until 2017. Boom, hit its all-time high. Now, if we take a look at the next time it hit over 60%, guess what time that was? In 2020. And we're at 60, actually, let's break it down. May 31st, 2020, with 60.88%. Again, moved a little bit sideways. We had gone through a lot of pain, and then it went up to where we hit the first bump, April 13th, 2021, 63,000. The next bump, what was that, November? 2021, 57,000. That's not right. November, there we go, 67,000, November 8th. But again, it was one with 60%. Now, here we are again. We were at 60% over here. Now we're at an all-time high. It was 66%. So could this be a reversal? Sure, it could, but just hold on because it's just one indicator that we have to look at. Also, if we take a look at the RHODL ratio, which what the heck is that? The realized value is the price of the coins or UTXOs when they were last moved from one wallet to another. RHODL ratio looks at the ratio between RHODL of 1 week versus a band of 1 or 2 years. When the 1 week value is significantly higher, it's a marker that the market is becoming overheated, which is above here, right? Become overheated. I don't really care about this. It's not a really good top indicator. But what I took a look at was right down here, these RHODL ratios. And you can see in this little green accumulation, I would say, section, see how it kind of bottomed out right here, almost at the ratio 93, 96. And then it kind of came up here around, let me blow this up so you can see it, first of all. So it came out here, bottomed out at this lower range of 105.31 for the ratio. Not important. Then we take a look over here, went about halfway, ratio 202, okay? And then we come back, we take a look over here, and maybe, just maybe, as it comes down and it's trying to come back above that ratio. 350 instead of that 100, 200, 300, 350. So it's a good indicator of potentially things to come. Also, don't forget that we are in a midterm election. And like we talked about before, usually the stock price, which I believe that NASDAQ and Dow and S&P 500 are correlated a little bit with crypto. I don't know what the crypto market's doing. Whatever, if it's up, that means that probably the S&P 500 and NASDAQ is up. Correct me where I'm wrong. I don't know what it is. But if we take a look at the stock market performance since 1962, again, for the midterms, which happened in the first week of November, you usually start off in like a little negative or kind of a slushy way of not too great. And then within 3 months, 6 months, and 12 months, you start to see an increase in the stock market as everything starts to level out. Because there's one thing that the stock market hates, and that is ambiguity, not know what's going on. And of course, when we get, we jostle for those Senate and House of Representative positions, and we know who's in power, is it Republicans or Democrats, and we kind of ease into it, things start to do okay. And the midterm average, before the midterms, about 0.3%, so pretty much flat. And then 3 months, 7.3%, 6 months, 15.1%, 12 months, 16.3% increase. So those are some good things. I like those. I like to bring good news. I don't like to always bring bad news. I know people say that I'm continually bearish, but I'm not. I see the good things that are happening. And having said that, let's go to some bad news. So that's the good part. But I still have some concerns. And one of those concerns is this. There's a couple of charts that I put together, and you can find those. There's a link in the description. It's very top. It's cycle lows and highs. And if we take from the tip of the bull market, that was 2012 to 2015, we can see the top, the price was 1127. At the bottom was 172. That was an 85% reduction. The next one, in 2017, the top was almost 20,000. The bottom was 3,200, which is about 84%. And thus far, depending on who you ask, the top was 67,145. The bottom was 19,047. Some people will actually say it's 17,600 or 17,400, depending on which exchange that you look at. But that's between 71 and 74%, which is still a far cry from that 85, 84%. I still think we may have a little bit of ways to go. And then on top of that, there's also those macro factors. And this was a good tweet just put out, because there's two things that we can take a look at that can lead us to indicators as far as recessions and downturns. It's the housing market. If we learn nothing from 2008, this is it. And Wall Street is betting that there's going to be a market crash, essentially. The second biggest home price decline since the Great Depression. I wasn't around then, but I heard it was pretty bad. So real quick, U.S. home prices declined month over month last week for the first time since 2012. Not too bad, I don't think. I mean, not just a month over month. But corrections in home prices can be expected in 2023 as long as interest rates remain elevated. I think we just crossed over the 7.06% interest rates for mortgages. And that's not good. The higher the interest rates go up, the more that people can't pay for that and they back out of the deals, then the more that the builders have a massive amount more of supply and there's not as much demand. Then they have to lower the prices and the interest rates keep going up and there's more supply, there's less demand, and it's just a bad sign all around. Now, I could be wrong, but this is just what people are looking at. By the end of 2023, U.S. home prices could fall to 7%, predicts Morgan Stanley. Not that they're right all the time either. That's a lot smaller than the 27% peak-to-trough decline between 2006 and 2012. Remember those days? But it's more than the 3.1% peak-to-trough decline in the early 90s. Look, I'll take 7% decline. I'm okay with that. I'll take it all day long, actually. But the 7% is Morgan Stanley's base case forecast for home prices. The bull case is a 5% climb in 2023. I don't think that's going to happen, but okay. The bear case could exceed a 10% decline in 2023. Other U.S. home price forecasts for 2023, Goldman Sachs, they say it's going to fall 5 to 10. Moody's, 5 to 10% reduction. Fitch, between 10 and 15%. So whichever way you slice it, the whole market, I think, is going to really be an indicator as far as what is going to happen as far as that recession. And that's okay. Recessions come and go. Recessions last between 18 and 24 months. But after that, it's usually a big economic boom. But there is one thing that does give me pause and think about the positivity, which is this. There's a lot of money sloshing around out there. And right now, I think we're still under $1 trillion market cap for crypto. It may have bounced above or may be lower. I thought it was like 960 billion. But look at all the money that's out there, just looking for an asymmetrical bet. So the Fed's balance sheet, and this is not good actually. This was in 2020, it was 7 trillion. Now it's almost 8.6 trillion, and they're unwinding it as time goes on. As far as billionaires, these guys, Bezos, Gates, Zuckerberg, 8 trillion. Gold is almost 12 trillion. Fortune 500, 15 trillion. Stock markets, 90 trillion. The money supply, which is way more now, 100 trillion. Global debt, 253 trillion. Global real estate, 280 trillion. Global wealth, 300, that's the big one. Global wealth, 360 trillion. And then, of course, derivatives, 1 quadrillion. That's futures, forwards, options, warrants, and swaps. So for all these are, each one of these little squares is $100 billion. I'll just take a couple of those and then roll that into crypto, because maybe these big companies, the BlackRock, which they've already done, the Morgan Stanley, the JP Morgans, they look at this and go, you know what? We can't keep a cap on this forever. Maybe at some point we'll get into it. And that's the bear or the bullish case for me. Anyhow, let me just think about that in the comments section, and then let's finish up real quick. Just so you know, and we've covered this before. This is an article a couple weeks ago. The IRS is stepping up efforts to target U.S. taxpayers who failed to report and pay taxes on crypto transactions. So just so you know, you can't say that it's a boating accident. You can't get away with that anymore. That may have worked in the past. I don't even know if it did, but not anymore. So if you use an exchange, they know who you are. They know through KYC and AML. So I just got this nice email from CoinLedger that said, hey, look, if you got questions, we got answers. They're going to do a live Q&A, tax extension deadline, and there's a link in the description that's going to go through this. It'll be in 6 days. If you are somebody who needs help with your taxes, maybe go and talk to CoinLedger. Also, there's a link in the description. Looks like this. Crypto tax made simple. How to use Crypto Trader. And it shows you how to do it. And then you can use that software. Because I know it's very stressful to deal with that. So this is the one that I've used. I've used it for 2 years. It's very simple. From the time that I set it up and ship it over to my CPA, it takes about 30, 45 minutes or so, because it does an integration with all the exchanges. And that's what's going on for taxes. I know that's not exciting for most of you, but for other people, it makes you sweat like crazy. So that's that. And then lastly, I just want to say that the SEC is insane. And everybody was talking about this yesterday, and I was glad I didn't have to do a video yesterday. I mean, I like doing them, I do, but it seemed like everybody was talking about this stupid Kardashian thing. I don't care about it, but it's just a stunt. I think it was a stunt, and it makes me angry. I don't know how it makes you feel, but the SEC goes over, like, I don't care if they go over the Kardashians. The Kardashians are fine. But you get all this insider trading. You just had those two brothers from Coinbase that got busted for insider trading. Yet, Congress seems to get a pass. And actually, this whole thing that happened with the Kardashians, if you don't know, she didn't disclose that she was promoting Ethereum something, some diversion of Ethereum, which was she got paid like $250,000, and they said, give us now you're going to pay us $1 million for that, and she did. I think it was already staged, but it doesn't really matter. But there was this great one from Jungle Inc., and he had I don't think you'll be able to hear this, but Gary Gensler was on Squawk Box. Let me see if I can play this a little easier.
Stop. You need to disclose not only that you're getting paid, but also the amount, so the source. If you were to see an ad, and I think we all did during the Super Bowl, for example, with Matt Damon around crypto, I don't know if in the fine print of that ad, it said how much he was being paid personally to promote that. Would that be something that would be required?
I'm not going to get into, Andrew, I understand the question. I'm not going to get into any other specific circumstances, but it always depends on the facts and the circumstances and the anti-touting provisions of the Act.
Well, but I guess what's the distinction if we were to see an ad?
And then it goes from there. So it was a great question. I thought it was interesting that, hey, does Matt Damon now have to disclose out on every commercial how much he gets paid? Just interesting, because that's just what it is. Then lastly, I'll just bring this point up that Congress is not supposed to participate in insider trading. But if they do, just so you know, there's this thing called the Stock Act that was passed in 2012. But if they break it, and they've broken it many times, I'm pretty sure, they face a stiff penalty of $200, or it's waived by the House or Senate ethics officials who they probably serve on those committees too. So I just found it just unbelievable. Rules for thee, but not for me. And people get busted even though Congress gets to do whatever they want to. Anyhow, that's just my little rant. And then lastly, I will just say positivity is I'm always harping on my rules underneath, right? Don't invest more than you can afford to lose. As I say, it's all gone. If you have that mentality, it's better. Treat everything as a scam until proven otherwise. Don't leave anything on exchanges. Don't use leverage. It's the fastest way to lose money, and take profits along the way. Nobody ever went broke taking profits. But this middle one, don't leave anything on exchanges. You know now that you can connect your ledger to Ledger Live, and then you can, just these 5 easy steps, you can connect your ledger to Ledger Live, and then click on swap on your portfolio, and you can swap whatever you want to. And as long as you can sign into your FTX account, they'll take it right from FTX right to your ledger. So it like misses a step, or not misses a step, but it eliminates a step to make things easier for you. I just thought that was pretty cool how the ledger integrated that, and that's it. So look, that is it for today for the news. And that was a little bit, for some reason, went 17 minutes. I don't know what happened there, but that's it. So look, if you want to stick around, we're going to do a little Q&A. I'll answer all your questions the best of my abilities. If not, take off. You've been here 17 minutes. I appreciate it, but that's it. So on your way out, if you would be so kind to hit the like and the subscribe, that's good. But right now, let's get into a little Q&A. All right. This is my favorite part of the whole show. Jarrett